Did you know that trading Volatility 75 Index is very easy? We have developed a very powerful scalping strategy that you can use and make massive profits when you are trading Volatility 75 Index. Welcome back, it's DC. In today's video, I'm going to be sharing with you guys a very powerful scalping strategy. This strategy works on M5. So if you're watching us for the first time, please make sure you subscribe to our channel, like and comment. Okay, without wasting much of your time, guys, let's quickly look at how this strategy works. Okay, so we have these indicators that we have on this chart. We have these indicators that we have in this chart. For you not to miss any important information, watch this video up to the end. I'm gonna share the settings for this particular strategy. Okay, so let's quickly look at the conditions for you to buy and for you to sell. And I also am gonna be giving justifications why I chose this particular indicators, because there were some people who were asking in our previous video why I was using a 3,000 exponential moving average. So today I'm gonna answer that particular question. So let's first of all look at the conditions. So I'm gonna first of all talk about this red line. So this red line, this particular red line that we have here, it's our trend filter. This is our trend filter. It tells us when to buy and when to sell. It tells us when to buy, when to sell. So when the price is below this particular line, we are going to be looking for selling opportunities. So this trend filter was designed in such a way that it aligns with the high time frame trend. So on our high time frame, if you're having a bullish trend, so that means in our 5-minute time frame, we should be looking for buying opportunities. If you're having a bearish trend, the price is moving down, there's a downtrend on the high time frames. On our M5, we're going to be trading along that downtrend. So this is a high time frame trend filter. So again, we also have these two lines. In our previous video, we talked about these two lines. These are the lines that are going to give us our entries. So the two lines that I'm talking about are this one. We have the white line and the lime green line. This lime line, these are the lines that are going to give us our entry. Then here we have added a stochastic indicator, and on the stochastic indicator there's only one line. The stochastic is going to be giving us the overbought and the oversold levels for us to know if there's going to be a possible reversal in this particular strategy. So what this strategy basically will be doing is this. It normally trades pullbacks that occur within a prevailing trend. We'll be trading pullbacks using this particular strategy. Okay, so let me tell you how this strategy works. So the first thing, like what I highlighted, we said price must be below this line, so we look for selling opportunities. Then the second thing, we're going to go to our indicator window where we have the stochastic. Our stochastic lime line here, if you're going to be selling, we need to make sure that price has reached our overbought region, which is above 80. So the 80 above 80 denotes the overbought region, indicating that there's a likelihood that price is going to reverse and move downwards. So one, price is below the our trend filter, which is the red line. Then the second thing is that price must go above the 80, not going only above the 80. It must then cross the 80 level. When it crosses the 80 level, now price is now moving from the overbought and is now ready to move downwards. So price would have gained enough bearish momentum. Then the last way we're going to be getting an entry is here. So what we want to see is this price must break this our EMA bands, which is the white and the lime line, and then it must come back, and these exponential EMA bands will act as our dynamic support or resistance. In this particular case, it will be acting as a resistance. So price will try to go beyond this, and you'll see as the force of these two EMA bands will cause the price to move downwards. You see, price will try to penetrate and go beyond this, but it will then bounce from this line, indicating that there was a strong resistance on our EMA bands, which are those white and lime line. And from there, you how are you then going to take your entry? Okay, one, price is below the red line here on our stochastic. Price is closed. You can see it is closed the 80 line. You then go to the last point, which is the last condition. We want to see price is will be selling closing below this particular line here. When that happens, we take our position here. So we are going to take our position when this candle is closed. On the next candle open, we are going to sell. You see, so we're going to sell at this particular level here. We're going to sell at this particular level. So we're going to get our sale at this particular, when this candle closed, this strong bearish candle, when it closed here, we're going to get our entry at this particular level here. So when it comes to our stop loss, this is on 5-minute time frame. We're going to place it just above the these EMA bands, these two EMA bands. That's where we place our stop loss. So our stop loss is just above this particular level here. And then for our take profit, you can make use of a 2:1, or you can wait for price as long as price trades below these EMA bands, like what was taking place here. You can see price didn't cross above these EMA bands. You see price was just moving down, You hold that particular trade. You'll be holding this particular trade until there is a candle that is now going to close above this line, because this is now indicating that there is a possibility of price moving upwards. So we want to close when we now have a candle that closes above this line here, like what took place at this particular level here. We have this bullish candle that closed below this line, then we're going to exit. So look at how powerful this strategy is. Your entry, so your entry was going to be here. Let me just do this. You're going to get an entry right around this particular level here, and you're going to hold this trade until price reaches this particular level here. You see, this is where you're going to get an entry. Look at the massive risk to reward ratio. So the advantage of using this particular strategy is this. One, this is the smallest drawdown. So that means if you have a small account, probably you have your $5, your $10, you're in a position to use this particular strategy. Why? Because you're not going to incur a lot of loss. There's no drawdown. There's less drawdown that you're going to face when you're using this particular strategy. So apart from the low drawdown, there's an advantage again of having a highest risk to reward ratio. You can see the amount of risk that we're going to be facing compared to the reward, the profit that we're going to be getting is a lot. This is the risk and this is the reward. You see, it's massive. So this is how we sell when using this particular strategy. Okay, let's look at recently what has been taking place in this particular market. Okay, we want to go to what has been taking place. Okay, we go on our 5-minute time frame. So when buying, we need to wait first for price to go above. The candles must be above this red line. That's the first condition. And then the second condition is that we need to wait on our stochastic. We're going to go on our stochastic now. Okay, here. If you check what happens here, it's slightly price was able to go below this. So the 20 level on our stochastic level, it represents our oversold region. And when price reaches that and closes above, price will now be ready to make a reversal. So you want to buy when price has reached an oversold region and it's now ready to move upwards. We can see this by the crossing above of the 20 level on our stochastic level, stochastic indicator. So price 1 is above the red line, and then there is on our stochastic indicator, price has reached an overbought and is now ready to move upwards. If you can check what happened here, this is exactly what took place here. This is what is taking place here. Price reached below 20 level and is now ready to cross, and it crossed above 20. We don't take a trade there. We wait here for the EMA bands. These are the EMA bands, the white and the lime, the white and the lime line. Price must be rejected on that particular level. That level must show that there was a support on that particular level. So we're going to wait here for price to come to this level, and then it's been rejected here. This level or these bands are acting as support. And when we now have a candle, a bullish candle in our scenario that crosses above the white line, we're going to take a buy. So we're going to get an entry right around this particular level. This is where we're going to get an entry. Our entry is here. Then on the next candle open, that's when we're going to buy, and our stop loss is going to be below this recent swing low and also below the white and the lime line, or basically our EMA bands. So we're going to buy from there, hold the trade. We'll be holding the trade as long as we don't have a candle that is going to close below the white line. Now it's now the white line. When this happens, it happened at this particular level, we are going to exit. We have a candle that closed below this particular level here. This is where we had a candle. So we're going to get an entry right around here. This is where we're going to get an entry. And we're going to hold the trade. So we're going to get an entry here and hold the trade until it reaches here. This is a scalping strategy. By this particular movement, this asset moves very fast. And I'm telling you, you'll be in a position to make a lot of profit. And apart from the advantage that we talked about, the low drawdown and also the high risk to reward ratio, we also have an opportunity to use this strategy multiple times. So it will offer you an opportunity to trade this using this strategy multiple times. Like here, we're going to get an entry here. We're going to get an entry right around this particular level here. You see price here reached the oversold level and it closed above. Then we're just waiting for, let's look closely at what happened at this particular level here. We're just going to wait one price, okay, reached the overbought and it crosses above here. And we also have a rejection that took place around these two lines. You can see we had a candle that closed above here. We're going to enter here. And our stop loss was going to be placed just below here. Although here we had a drawdown, a small drawdown, then price then picked up momentum and then started to move upwards. That's basically how you trade. So in this particular level, you'll be holding the trade because you're still waiting for price to push upwards. So the EMA bands, they act as our trailing stop. They also act as a signal for our entry and our exit. So that's the importance of those white and lime line. Okay, guys, I'm happy to announce that we have launched our DC trading challenge where you can trade in your demo account and win cash prizes, and a lot of trading tools. Will be giving out some trading robots and some indicators, and we are also going to be giving out free access to our VIP signal group and also our mentorship classes for those who will be selected as a winner. So for this week, we're going to be starting on the 6th of January, and the trading challenge will end on the 11th of January. That's the our trading week for this particular week. So this trading challenge is free. There's no registration fee that you pay. So just get in touch with me and get access to this amazing trading challenge. Okay, so we'll be giving daily updates on what is taking place, who's leading, how many participants do we have, how are they trading. We'll be giving you updates to this particular information. Okay, apart from that, we're happy to announce that we now have our DC website. Our website is www.dcfxtrading.com. That's our website. Go there and you can get access to a lot of indicators and robots. There are also strategies that are there on our platform. So you can now access these trading robots and indicators and strategies on our website. And you can also pay for our mentorship and our VIP signal group through our website. Okay, apart from that, let's quickly go back and now talk about the settings. Okay, so these are the settings that we have. we have the following settings. So let me just quickly delete everything and install the settings again. So I'm going to start with the 2400 exponential moving average with the color red. We make use of the 4 pixel. So you click save. So how did I come up with this this particular exponential moving average, which is our trend filter? Okay, so on our 5 minutes, I want to trade along with the 1 hour. I want to trade along with the 1 hour. So what I did is this. This is what I did. I'm gonna take my calculator. This is the secret. So in 60 minutes, how many 5 minutes do we have? So I divided 60, which is 1 hour, divided by 5, we get 12. So 12 multiplied by 200, because we want the 200 exponential moving average that exists on the 1 hour to come on our 5 minute time frame. So I'm gonna do this. So it's now 12 multiplied by 200, we get 2400. So the 2400 exponential moving average reflects or is equivalent to the 200 exponential moving average on H1. I hope you understand this. This is very easy. So the 2400 is our H1 time frame moving average, exponential moving average. So we are trading along with the high time frame trend on our 5 minute time frame. So that's how I came up with that 2500. The same applies for that 3000, but I will explain in a different video where I was using the 3000 exponential moving average. But mind you, this was on a 1 minute time frame. We are working with the 5 minute time frame. Okay, let's quickly go to the next settings. So we now have a 50 exponential moving average, and then this it applied, the method is exponential applied to high. The high, then the style is going to be 4 pixel with the color white. Then on our chart we have this moving average, which is this white line. Then we're also going to add another one because it's a band. So again, it's going to be, it will have a period of 50 shift to 50 0 method exponential. Then here on apply to, we're going to say low, and then it's going to have the color line with the 4 pixel. Then if you come here, we have these 2 bands. So we now have our indicators that are there on the main chart. Then the last one is going to be the stochastic. The stochastic now, when I click on the stochastic, the default settings are like this. We're going to change. We are interested in the main. So we're going to make, my background is black, and I'll make the signal line on the styles for the stochastic to be black. We are interested in this one. Then this one, I'm just going to make it line, and I will increase it and give it 4 pixel. And this one, we don't want to see it. It's going to have 1 pixel, and it will have a dark color. So we want, on the stochastic, we're interested in the main line. The main line with the signal line and the main line. The main line is the one that we have. We leave everything as it is. The percentage K period will be 5, percentage D period will be 3, slowing will be 3, period filled, low over high, method simple, then everything remains the same. Then on the levels, we have 20 and 80. So those are the levels that we have. Then we click save. Then if you come back, we now have all the settings for this particular strategy. So whenever you see a strategy, don't listen to the person telling you that, okay, this strategy works. This strategy is very, very helpful. You shouldn't listen to what people are saying. I want you guys to go and do your back testing. I want you guys to go and do your back testing, because some people claim that, okay, you only picked a few trades because this is where the strategy was working. No. Whenever a strategy is given, go and do your homework. Your homework is to do your back testing and see if that strategy really works. So I did the back testing, and I was able to make an EA and an indicator. I know that this strategy is very, very powerful, very, very powerful. And for this particular video, guys, the PDF is going to be free. What you need to do is this: comment on this video. 1, subscribe to our channel. 2, comment. When you comment, I want you to write free PDF. Then you're also going to send me a screenshot of the fact that you have subscribed, you've liked, and you have commented on this particular video. You'll get a PDF. This PDF is for free. I'll give you it for free, but the indicator and the trading robot is now on our website, but that one is paid. So what is going to be free is going to be the PDF. So guys, basically this is the strategy. So which assets apart from volatility 75 can we use this strategy on? We can also use this strategy on all volatility volatility indices that are there on Deriv Broker. All the volatility, be it volatility 10, 10, 1S, be it volatility 50, 50, 1S, 75, 75, 1S, volatility 100, 100, 1S. Then we also have volatility 115, also volatility 250. So this strategy, guys, is the strategy that you've been waiting for in 2025. This is the strategy that will help you to make a lot of profit when trading volatility indices on Deriv platform, this Deriv synthetic indices. Guys, thank you so much for your channel. So our goal for this year, we want to reach at least 100,000 subscribers. That's our goal for this particular week. Guys, thank you so much for your support. The channel is growing. So I know, let's just share this video. Let's just like and comment on this particular video. Guys, thank you so much for your time. It's bye-bye for now.